one day folks will wake up and realize that gold at $5,000 an ounce or six, seven is not it's the real deal. They still, people hesitating to buy gold miners. They don't really believe in the whole inflation thing. People are still thinking on the whole deflation thing anyway. That's coming.
All right.
Oh.
Very good. All right, Greece. Hi, guys. Are you still allocating new capital to the Greece theme, or is that now run enough that there is better value elsewhere? That's from Anthony.
We're looking at Greece. We're in the process of reviewing it. It's done very, very well for us. Um, but that's all we'll say at this stage. Gosh, yeah. Look at that chart there, Lucas. You could have said the same thing. Having bought it, let's say in 2016. I mean, that was back then toxic waste. This is the actual Athens index, which GREK tracks. And fast forward to 2022. What's that? That's 6 years, isn't it? Yeah. And you've had nothing to show for it. And all of a sudden, boom, off it goes. Huh. Yeah. Sometimes things, folks, you can catch the bottom of the market, no problem, or near to it. But no one bothers to tell you like 6 years later, it's a 6 year bottoming process. Often, often we find that's the case with the things we invest in.
Hmm. All right. Brazilian small caps. Hi, Chris and Brad. You've already included iShares MSCI Brazil ETF in the portfolio, but what is your view on Brazilian small caps, for example, the Van Eck Brazil Small Cap ETF BRF? That's from Fred.
Seen one, seen them all, as they say. So this is the MSCI Brazil index. So this is the index that the ETF EWZ tracks, and then there's the small cap ETF BRF, which will be essentially tracking the MSCI Brazil small cap index. Now, we've indexed them to 100 as of 2018, and there we go. Um, there's no difference between the two. So it's not going to achieve anything you buying Brazilian small caps
Okay.
over and above, the large caps.
Okay, very good. Other questions? Deflation. Analysts in some circles postured that deflation is more likely for the foreseeable future in the US rather than inflation. So I was wondering what is your opinion and what your opinion was and how might it affect your outlook and positions. Thank you. And that's from Will P. There's a link there for people who want to read the article.
Okay. Just read it out,
All right.
Lucas. Yeah,
As
it's
I've
actually
con-
quite
yeah,
telling.
as I've continued to say, deflation is smacking the US economy in the face. Tariffs are deflationary. AI and robotics are deflationary. Deportations are deflationary. Too many people have their brains broken by politics to understand what is happening right now. Even trueflation, the most accurate inflation measurement in my opinion, is showing an inflation at 2.5% this morning.
Yeah, look,
Um,
we've said this before. You go back to the previous periods of inflation in our lifetimes that people have experienced. They were like remember the Asian tigers, right? They were demand-driven inflation. And so people like this chap, um, who doesn't have the best track record, I must say, they're looking in their rearview mirror and saying, I don't see growth. Fine. We don't necessarily see growth, although there are pockets of the world where there is growth. But you don't need to have that. You have supply constraints. Most of what we've been investing into has been capital starved for many, many years, and it's in industries which are depletive, and that's in the commodity space, definitely in the energy space. Then you combine that with the debt problem, which is being solved by um, monetizing debt and or just issuing more debt. Those are all debasement trades, right? Now you can have an economy that is weakening at the same time that asset prices are rising. All you need to do is go and look at freaking Africa. Show me one African country that is in deflation. Like and then and then at the same time, show me the same country and tell me whether it's in a growth phase, right? So they're experiencing stagflation. They're experiencing a debasement of currency on a consistent basis, and that can be true whether the economy is growing or not growing. So where Americans in particular, I see this a lot with Americans come out, is they're looking and saying, well, we don't see growth. We see all of these things as deflationary, not understanding that supply matters, and they're looking mostly at the demand side. Now, we don't even need to have that. I could look, what I say doesn't really matter. Have a look at what the markets have been doing in the last few years. The markets are telling you where to go. So I'm happy to
Yeah.
make the trade that we have made and will continue to make. And the only other thing that I'll add to this is I pay zero attention to anybody online who does not have skin in the game and i.e. manage capital. There's any number of noisy people out there with whatever that have an opinion. And an opinion is one thing, but when you have to face the markets every day at the coalface and make a decision and then turn around to your clients and justify that decision and justify the results of that decision, I can promise you that your pencil gets sharp and you start thinking about things very differently to just getting views on Twitter or YouTube.
Just building on what we talked about before, gold and S&P terms. Go to the next slide, Lucas. So this is perhaps even more telling. So we take the MSCI World Index in US dollars. So that's okay. So that's the yellow line, and this is indexed to 100, I think it is, at the start of the time period. And
Yep.
then we take the MSCI World relative to gold. That's the white line. Okay, well, it'll get more. Okay, so I think, look, what happens to equities? You should always look at the behavior of equities in real terms, not nominal terms, because that's the true measure. Okay, and then the question is, well, like, what the hell is real versus nominal? Well, looking at what things they're doing relative to gold is probably, a step in the right direction, as opposed to, official government stats on what inflation is. The next slide. Okay, now that's the same as the previous slide, but except we just take it from the start of 2000 and index it to 100. So MSCI World Index is up some, what's that, 500% in that time, but relative to gold, not so much. Okay, now we go to the next slide, which is the same as the previous slide, except we take it from the start of 2009. Now, we would have it that 80% in inverted commas, or the majority of the bull market since the GFC, or in fact all of it, it can be attributed to monetary debasement. That is what has got ourselves out of the shit from the GFC. That's what's got us out of the shit with respect to the COVID thing and everything in between. You could say the same thing about the 2011, 2012 Euro debt crisis, the pigs crisis, so on and so forth. Um, and that we are going to pay the price for. So it hasn't been a real bull market. It's been an unofficial bull market, a monetary debasement bull market. There we go.
Very good. Okay. Clint has a question on the chat. If someone could get it's going to be quite a detailed answer. I think we should probably do a video on that, but let's move on. Lumber. Hi guys, what do you think about lumber as a play? It is truly hated right now with prices creeping down to 2009 levels. Thanks for all you do. That's from Pete. It's an interesting idea.
Yeah. Go to the next slide, Lucas. This is the World Timber REIT Index ETF. Most of it's actually Warehouser. There's nothing really in there that sort of catches us. It's not out of favor, unloved. Actually, sure hasn't really gone anywhere for like the last few years, but there's nothing compelling. The other issue is that there's so many other things that are just, slap you in the face compelling. So yeah, there may be some value in this, but there's much better value elsewhere.
Okay. Wheel strategy.